Good afternoon. It's Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Tuesday. Not a real big turnaround Tuesday, thankfully. D's corn finished down 2 3/4 cents at 460 and a half. I'd gotta call that a victory. Looked like they were going to really come after it. We have to survive these overnight markets. I was talking to a client of mine who's been a client of mine for probably, I don't know, 15 years. And I think the world would be a better place if we did not have the overnight markets. It's a complete, and they got rid of them in the livestock years ago. I don't think they're brave enough to do it for the grains, but I think the grains as a product would be better if they just went back to 9:30 to 1:30 every day. And it's a different market. It's not the grains. Uh, Most commodities don't need to be open 24/7. You can have that with the metals. You can have that with crude oil. But for a real commodity like this, I think you'd be better served with just 4 hours a day. You'd have much better liquidity. So that's just my 2 cents. It's never going to change, but we have to survive these overnight markets. These corn down 2 3/4 cents at 460 and a half. Novi beans only down 3 3/4 cents at 11.91. Still hanging in there. Wheat just doing what wheat does. Another 20-cent trading range today in SEP wheat. Um, that's going to continue to be, I think, the standard operating procedure. I think you've got 10 cents worth of swing every day in corn right now, 20 to 30 cents worth of swing in beans, and 25 to 30, 35 cents worth of swing in the wheat. For the next month, get used to it. That's why, if you are looking to make cash sales, I believe you need to have targets working because it may only be there um, for a fleeting moment, and you don't want to miss it. And as much as I don't like the overnight trade, it might happen at 3 o'clock in the morning. So have those orders working with your elevator. I mean, your elevator just they they'll sell it on the board for you. That's how that works. So, but get those orders working, guys. You don't want to miss it because it's just moving too much right now. And we survived the 12 o'clock weather update. We'll have another one tonight, at 6, and then another one in the morning. So we'll see how it all changes. Novi beans, though, I have to say this. I'd have to call today a victory because it looked like it was going to be pretty ugly early on. In the livestock, kind of a different story there as well. You're just continuing to see long liquidation. A couple times we've thought that this market was going to turn around. We had a couple key reversals, and I'm going to talk about that tonight. I'm doing my podcast. I kind of waited. I was going to do it Sunday, but I wanted to have something to talk about, and now we do because now we've made new lows here in the cattle. I was just talking about cattle. A couple of times we've had these key reversal days where it looks like the lows are in. We make a new low, we turn around, we settle higher, and then 2 days later we're lower. So those technicals have not been um, really worth um, the salt that's in them right now. Sometimes they work, sometimes they don't. I always talk about that. You have to watch them, but you still have risk no matter what's going on. The key levels so far have not held. Now, that being said, August fat cattle, they've done a 38% retracement of the 5 month rally, the real big rally. And that's the other rub against the technicals. It depends on which low you're looking at. I always do multiple ones so you can sort of take a look at them. If you go back to the November low, 198 low, and then the May high, April high, actually 251. This level here, this 231.40, it's right snap dab right on the 38%. So are we going to go down and test the next old low at 222? Well, that's another $10. So all I can tell you is if you are not hedged, um, don't go buy expensive puts today. If you do have hedges on that have gained value, and we've got some that have, we're looking to try to roll those down and take money off if we can. And what does that mean rolling them down? Well, typically if I can roll something down $4 and take out 70% of it, I will. Um, and when would you roll it up? Well, if you spend $1 to go up 4, and then the market rolls over and you can pull off 280 on the way down, you're spending $1 to make close to $3. That's not bad risk management. That's what I try to do. No, obviously you try and do more, right? You'd rather spend $1 and go up $6, and then roll down $6 and get 420. Uh, but That's what we talk about when we're talking about rolling options. So we'll be looking to do that here in cattle, uh, especially tomorrow if these lows don't hold. August feeder cattle down 555, settled at 348.80. We went all the way back to the June 8th and 9th lows at 349. Took it out. Uh, so lots of pressure there in the feeder cattle. We've gone down now 30 bucks in 11 days in feeder cattle. We're well overdue for a recovery. I think a lot of people are worried, are we going to go back to the June 4th low, which is basically 336? That's $12 from here. So yeah, we've dropped 30, actually 29 to be specific. Is there another breakdown to 336? I sure hope not. Um, but again, same idea. We have some puts on out there for guys. We had some put spreads where we spent 5 cents to protect 20 cents worth of risk. Most of those now have doubled, depending on how much time are on them. And we're going to look to see if we can roll them down and take money off the table. Uh, deferred, the deferred months in lean hogs down again today. Those markets have been trying to catch a bid, trying to turn a rally here for a while. Really kind of negative action out there in the deferred hogs, though. I mean, a complete reversal from 2 days ago. Look at the Feb hogs had gone from their low at basically 74.40. Excuse me, not 74.40, 76.40. A couple days ago, we were trading 80 and change. Looked like the lows might be in, and completely fell out of bed here today. Took out 78. We're able to settle above it, but again, very difficult trade out there in the hogs. Big picture, yeah, the market's very oversold. Big picture, the last hog and picks report was friendly, but I think with cattle being under pressure, anybody that was stuck long cattle, they used their safety valve today and sold some of the deferred hogs as a way to spread off their risk. So today is Tuesday. Where we settle Friday, I always talk about that. The two most important days of the week right now, this time of the year, the grains and livestock, Mondays and Fridays. So keep slugging away. We'll see if we can get a recovery, and we'll see if we get a change in the weather forecast. Dees corn had a really nice 43-cent rally. We had come off that low there in Dees corn at 426. Yesterday's high was just under 470. We hit 469 and a half. The next big resistance up above, there's the 50, the 100, the 20-day moving average. All that stuff's in my letter. If you want to get that every day, sign up for it. I do the technicals every day. It's 2:30 p.m. I'm going to sit down now for about an hour and a half and do the charts. This is Chris. Have a good night. And those charts will all be in the updated letter tonight. Take it easy.